Good day, you are welcome to Kevin Davis Accounting. So, we are still continuing with our topic on bank reconciliation. Now, today I would like us to look at the format of the adjusted cash book. See, this is not different from the cash book that we covered, but the only thing that changes here is that we are still going to prepare it the same way, our cash book. Then, of course, we shall have this. We shall have our debit side and our credit side. Therefore, we shall have our debt, we shall have our particulars, and we shall have the amount. Now, remember the amount, you're only using bank, so since it's the bank column, the same this side, our particulars, and we shall have our amount. Now, how are we going to prepare? Because this is an adjusted cash book. Now, how are we going to prepare the cash book? Now, one, we are going to first bring the balance brought forward. Remember, we have a balance. Remember, they will give you, they have a cash book. So in that cash book, there's a balance that you get down as a balance brought down. So that balance brought down becomes the balance brought forward in the adjusted cash book. Remember, that's the balance we are supposed to reconcile. That's the balance that we're supposed to make it look like the one of the bank statement. So we bring it and say balance brought forward, and we put it here. Now, we have things like, for example, when you talk about the bank charges, those are expenses. So they're supposed to be credited. So we put them here. Standing orders as well, they're supposed to be here. Standing orders as well supposed to be here. Then, because among all items, we have items that go into the cash book and we have items that don't go in the cash book. So for example, here we only take, for example, receipts and payments. Now, the things like unpresented check and uncredited check, they go in the bank reconciliation statement. Now, for here, we are still adjusting the cash book. So what we do then, there's something they call a direct credit. For example, someone might pay you using check and might not inform you. For example, if you give out your bank details and the customer Y pays to your account, so it's a direct credit to your account. You don't know, but someone has put there your money. So if it's a direct credit, it means, for example, let us say it is direct credit from, let me say, Joanne. So you come here and you indicate Joanne, put the amount if it's a direct credit. Then here we can also have things like, for example, bank interest on the money that you keep in the bank. If it's a bank interest, it's supposed to be this side. The bank is giving you interest on the money that you're doing what? You put. Remember, it's a debit, so it will credit the other side. Now, we can have other things. For example, dishonored check. But now, let me talk about a dishonored check. A dishonored check might not always be on the credit side. It can also be on the debit side. For example, if you give out a check for an individual to take it to the bank, and that individual, when takes that check to the bank, it's dishonored. That means, remember, when you give it out, you have put it on the credit side. So, when it's dishonored, you come and put on the debit side. The same way here, when someone gives you a check, you debit it. Then, remember in your cash book, you have already debited it. Then, if that check is dishonored, in your adjusted cash book, you come and place it on the credit side to cancel out the earlier transaction of that check. Remember, I told that credit and debit, it has to cancel out each other. So, what you do now, if it has been cancelled, it has been dishonored, you come and put on the credit side if it was on the debit side. Then, if originally you had given out that check, and when that individual took it to the bank was dishonored, then after you also come and show it here as well. Now, then we can find our totals here. For example, we do Remember to leave some line because you might never know where the balance brought down will be. So we put it here like this. So let me say this side is the balance carried down. We indicate it here as well. So we bring our balance brought down here as well. So now we have adjusted our cash book. So after us adjusting our cash book, it's all about picking those, comparing the bank statement and the cash book. So what is in the bank statement and is not the cash book, you update it. So you see if something, let me say you look at the cash book, if something is there, you tick and it's in the cash book as well. So you tick on the bank statement and the cash book as well. So if something is in the bank statement and is not in the cash book, you come in the adjusted cash book and you prepare it again. Then after you indicate it, you show it in the adjusted cash book. So this balance here that we have got, when we are going to do our bank reconciliation statement, it's the balance that we are going to take as a new balance. So it will be balance per adjusted cash book. So this is what we start to do. Now let me show you the format of the bank reconciliation statement. Now, remember when you are doing a bank reconciliation statement, I told you, we first prepare the adjusted cash book. So we first look out for items that are in the bank statement that are not in the cash book. Then we place them in the cash book. Then when that's done, we also look at what's in the cash book actually that was not disclosed to the bank. Now, when it comes to the bank reconciliation statement, we shall say, this is the format, we shall say balance as per adjusted cash book. Then we bring it here, we show it here. So we shall put here our amount, maybe in Ugandan shillings. So you come and say balance as per adjusted cash book. Remember the cash book that we have just got behind here, the balance that we have got is the one that we bring here. So it becomes balance per adjusted cash book. Then after that, we come and say add unpresented checks. Why are we adding unpresented checks? For example, they can be check number 001, check number 003. Let me say that. So we have the amounts here. Then we come with the final figure here. So we add it, we had the balance per adjusted cash book plus the unpresented checks. Now, why are we adding the unpresented checks? Remember, when we were preparing the cash book previously, in that cash book, and these checks were credited. Remember, you were giving out these checks. But those checks that you were giving out, these people did not take them to the bank to receive that money. So that means those checks were actually credited. So for us to complete the double entry, we are going to add them back. You see, we are supposed to add them back. Remember, crediting them means we subtracted them. But now, we are supposed to add them back to cancel out that transaction. Remember, like I told you, we are supposed to cancel out that transaction. So we cancel it out by adding it back to the cash book balance. So remember, we had subtracted it off when it comes to the cash book. When you credit an amount, you subtract it off. Now, here, we are adding it back. Then, you less uncredited checks. Now, uncredited checks, these are checks that are, let me say they are check number 32032. We have check number 053. So we show the amount here. So we have a total amount here. We subtract it off here. And this one, we shall get balance as per bank statement. Now, the uncredited checks, remember, these are checks that you have debited. See, these are checks that you have debited in your cash book, meaning in your cash book, you actually have a debit of this what? Of these checks. Now, When you set debit in the cash book, it means you have actually added them there. Remember, you are receiving them. Now, these checks were actually not credited to the bank. If they're not credited, that means your bank account does not know these checks. So if your bank account does not know these checks, you come and list them and see. When you take them off, actually, you're going to get a total of the balance as per bank statement. Now, that means this balance we have here should be the same balance on our bank statement. So, when we do this, it means at the end of the day, our bank statement and cash book have reconciled. Ladies and gentlemen, this is how we do the format of the bank process statement. Then we are going to solve a question. One, we can have two kinds of questions, especially now for the students in class. They can set for you a question when it is wordy. Another one, they can set it for you when it is, they first draw for you a bank statement and a cash book, and then they tell you to extract how to do a bank reconciliation statement. So we are going to look at both scenarios and how we can attempt them all. So until we meet again, it's a goodbye for now. Thank you so much for watching Kevin Davis Accounting. Subscribe, hit on the bell button so that you can get more videos when I upload. It's a bye for now.